Good day, everybody. It's Greg Schnell, and I am here with the Market Buzz for June the 5th, 2019. Thanks for taking the time to join me. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trades. So I want to talk about a couple of things. I listened in on Martin Pring's presentation the other day, and he talked about deflationary forces at play. And I don't usually get into kind of the deflationary aspects of the markets. I think more just in terms of generally bullish or bearish, but we're definitely seeing some pressure on things like oil and commodities that are pushing things down. So with that, I want to go in and do a deep dive on gold and explain kind of some of the setups that we're seeing in the gold space and whether or not they're going to be a trade that we can kind of keep going with. So that's what we're going to look at today. And I will say that the financials look okay so far, and it's Wednesday. Really interested to see where the group closes on Friday. That's kind of one of the big areas I want to focus in on. So with that, let's go look at, this is the financials here. What I want to talk about is this period in the gold miners. And what you see here is this TYX and TNX broke out just recently to new highs. And what that is that's the ratio, the TNX, or sorry, the TYX, the 30-year yield minus the 10-year yield. And the concept is that when the yield spread starts to expand, you want to be careful that might cause a problem. And so we saw this back in October, and then we rallied for some, and now we're starting to see it again. And so I'm puzzled here to see if this breakout's going to make a difference. And what I want to, the one thing I just go grab a stock here. Actually, I've got one copy in here. The point I want to make is on the market breaking out, what we see, or on this spread breaking out, what we see is that this spread can be a very, I grabbed the wrong chart list, I'm sorry. The spread, as it expands, that's actually the bearish part. It's not when we get the inversion so much, it's when the yield curve starts to spread back out. And so I want to talk specifically about that because I've been bringing it up. But what happened this week when we had the big rally on Monday was that we finally got some move in this price action. And so you can just see it barely on here. It's just starting to pop through this line. But more importantly, I'm just going to go check some of these other ones. So what happens is when these trend lines break, we've had major market corrections kind of happen with that. And so when this broke here, we've had this move down, but now it's actually starting to break the major trend. And that's why I think we're in for more trouble. And it's this break of the major trend that is really something to watch for. So if as we go forward that continues, I think that's something to worry about. So here is the zoomed in version of that same chart. And what we see is this breakout to the top side in a meaningful way. And again, this is the 10-year trend line or 8-year trend line going back to 2011. So it's using the bond market to help us talk about the equity market and what the bond market is trying to tell us. So from this situation, I've just got the gold miners here, and you can see that they're currently breaking out to the upside. This ratio is breaking out, and what we've seen is the gold starts to follow it. But you'll notice that while this is going up, gold has also risen, and then when this moderated sideways for a period of time, gold moderated, and now they're starting to break out together again. We also see this, that the S&P pulled back. There was a rally in here, and now it's pulled back. And the real question is, does the rally reignite or does the rally roll over? And my suggestion would be that with this breakout in the bond yields, in the spread, that's a pretty important place on the chart. And so with that spread starting to expand, I wanted to go back and look at what happened in 2007 and 2008. So if we just take the front end of this chart, 2006, and we can see this chart um, was kind of going sideways and then all of a sudden started to break out. And while it started to break out, there was some jostling at the beginning, but this was when the stock market made its final high, October 2009. And then when that, October 9th, 2007. And when that did, this yield curve started to spike up. And when the yield spread, and when the yield spread started to spike up, this was a particularly meaningful place. And actually, gold behaved pretty well during that period. And until this spike reversed, gold was choppy, but it was also a good place to be. Now, again, it's knowing how choppy this gold is, maybe this trade's going to be harder than I planned for, but I thought it was actually we'd see a big breakout on the gold stocks, and that would be money moving into that as a protection against some deflation pressures. And when we got that move, that would be something very bullish for us, and we could kind of work from that. So seeing these all break out together, and then again the stock market breaking down while this breaks out, I think is a pretty meaningful place. Now, if we go back and look at this chart, you'll see it was late 2007 that this really started to kick up. Going into the gold chart, I think that's the wrong one. Going into the gold chart here, you'll see that when these broke out, there was the first move up, and then it was this late 2007 period where these took off to the upside, and gold was trying to move up with them. So that's one of the things I'm watching for. And again, it's not easy, never is easy, but this is a place to look. And we can see a big breakout from a horizontal zone here, call it $40 to $49. So it was a 25% move in a couple of months as gold broke above its prior highs, pulled all the way back tested it, and then went all the way back up to new highs. So not for a minute do I think it's going to be an easy ride. It never is, but it's one of the places that I expect to do well in this current environment. So here's GLD, and it's trying to break out here, and it's had I'll call it a reversal bar today. Let's just get an update on this. This is a few hours old. And so sitting here just trying to get going, and again, I think it's more important that we watch specifically the price action on all of this. We're trying to get through these big resistance levels, and who would be surprised if we had some resistance there. But I am seeing some of the gold stocks set up and seem to be getting ready to break higher. So with that price action, that's the kind of thing I'm watching for. So the wider perspective, again, is that as the yield curve normalizes, and maybe I'll just go and try and get that information. Is this it? Yeah, so as the yield curve normalizes, and the definition of normalizes is it goes back to the short time frames being less than the long time frames, but as this widens out, that's one of the clues that we have that the market might actually be breaking down. So we've already had the compression, and now it appears to be widening out to me. And so what should happen is that these lines get farther apart as the breakout occurs. And as that happens, that's probably when we expect most of the stock market to do its correction. And this is the 2009, I'll call it January lows of the spread, and then the stock market actually bottomed in here, but these continued to drop down a lot after that. And again, all of this period in here, I'll call it from 2009 to 2014, was all quantitative easing. So the Fed had its foot on the scale. But I think this early period in here, we also saw it in 2000 and 2007, when the yield curve, I'll call it, behaved normally or was allowed to move and spread out. That was one of the clues that we could use to help us. So that's one of the reasons I'm watching for it. And if you go back here in 2000, we'll call it 95 to 2000, we didn't really get that normalizing of the spread. It just stayed compressed. So here we have well, I think this is a pretty good example of the normalizing of the yield curve, and one of the reasons why I'm more worried now than I was before. Okay, so that's a particularly important issue to me, and I think if we don't get the right price action on that, that is kind of a critical zone that we need to watch for. So anyway, I'll leave that with you, and then the other thing I want to cover off just a little bit here. Here's the copper ETF, and again, it continues to drill down into the right-hand corner, and we're seeing it down 1% today. But what I'm worried about on copper is the long term, and this trend line is going to get tested. But if copper is going to roll over here and we're going to break this big uptrend, I think this is a major issue, and we also see it in the China stock or the China chart and in the lumber chart. And I think I have the lumber one just down here a little bit. And so looking at these trend lines, let's just go get a longer period. So what we've got on the lumber chart is this big trend coming across here. Let me just draw that in. And on this move, you know, if this holds, that's awesome. If this starts to break down, and you can see this 300 level is pretty important, and we closed at 316 on Tuesday. You know, down here at this 275 level, that looks like it's going to be kind of where it's going to meet the trend line. But I do not want to see lumber and copper break this trend line. Now, oil, we've got the same issue going on. Where it's the really big picture on oil continues to make lower highs, and that lower high situation is a scary one because oil represents a lot of global demand, and if we just put on a wide enough chart, what we can see is we've got these lower highs coming across here and lower lows. And now the real question is, you know, is this uptrend going to hold, or are we actually going to start to break down? And I think clearly momentum looks like it's rolling over here. So I'm having trouble getting pretty optimistic with all three of these major commodity indicators giving us some clues about the market. Now, if we just widen this out to whatever, 35 years, and here's oil, and you know, whether or not we want to use this long-term trend line off this 99 low, you know, maybe even just something like this, just I obviously didn't grab that right. Maybe something like this coming in here, and that, what does that put us at? Call it $30 or something like that. Maybe that's where we find support down here at 32. I think it's pretty critical, though, that we don't, you know, keep losing lower levels. And obviously that 40 level was support in 2017 and 2018. If that's going to break down, that's a problem. And then we also have this one on the top side. Probably best to place the line like that, something in that range. So currently we're range bound on oil, and these issues all seem to me to be showing a bigger propensity or a bigger weakness, and it's that move that I'm worried about from the commodity perspective. Now, one of the things I did today was go in and look at the banks, and I had set this up so the strongest banks are at the beginning of this list and the weakest banks are at the back. I will say these strong banks are still hitting new highs, and they look pretty stable in here. Here's Moody's Corp, it's down slightly, but Ameriprise Financial, this one is building this base underneath 150 and looks very close to turning up, and especially the price action this week, fully retracing last week's sell-off, which, you know, just got us down to kind of 2-month lows or something like that. We still have lots of positive momentum here, so that all looks good. But looking in on some of these, this is a Russian bank. It's trying to break out to new 52-week highs. Here's ICICI, and it had broken out 2 or 3 weeks ago and is just holding above the 10-week. Doesn't look that weak. Here's Equifax. This looks like it wants to break out to the upside. So another one, I'll call it positive. And this Westpac just recently broke out to 6-month highs, so that looks okay. T. Rowe Price coming down, bouncing off the 40-week. If you get a bounce here on the momentum, a bounce above zero, that's just what we saw in gold. And that's very bullish if that starts to turn up. So I'm trying to balance the view I have that, the commodities are telling me weakness. Gold is signaling deflationary forces. We have the bond market telling us to get more cautious, and yet we have these banks trying to break out here. So here's the 110 level on the Chicago Board of Trade, and this looks like it wants to break out to the upside. We see the same thing on the NASDAQ exchange. I'm just going to scroll down to it. Here's the CME, the Chicago Mercantile Group, and it's breaking out to new highs this week as we speak. It's broken its down-sloping trend line. I like this a lot here. This looks like a really nice place to enter this trade. Intercontinental Exchange breaking out to new highs. All of these look really good. And here's the NASDAQ trying to break out. So I think if anything, these exchanges look excellent. They look like a great place to go within the financial sector. So that's an interesting area to watch for. But if we go to the bottom, and I'm just going to grab this here and scroll down to the worst performers, and there's a reason to go there, is they're all trying to bounce off support. And if they were to bounce here, they'd be making higher lows. And it's this higher lows situation we had in 2016, where as they bounced out, that was pretty big. Now, the issue I have is this was the period when commodities were declining, and this was the commodity low. So unless that's what's starting to set up, we're making a major commodity low, that would be helpful. But that's not what the charts look like so far. So anyway, with this rollover here, this is trying to take out the prior low. It did take out the prior low, and obviously one of the weaker charts. Here's Societe Generale out of France. This one broke down to new 5-year lows, or probably long-term lows. Anyway, if they're going to start to bounce right here near these prior lows with a higher low in momentum, that's more bullish, or that's a place I'd rather be bullish than bearish. So you're sitting at prior support, you come down, you start to make a higher low. And again, the end of this week, next week, would be pretty important to see if these lows are going to hold. And if they continue to let go, then that's going to make it harder. Now let's just go to the previous page. So here's Banco Santander. This one looks like it's trying to base, again, trying to make a higher low here. Don't know if it will be able to again, but if these charts fail, I think that tells us a lot. If these charts hold, I think, my pessimism has to be tempered with the fact that they could actually start to make a bigger trip higher. And I would be, like as an example, if I draw a trend line across these two peaks and I have this big dip and then a very tiny dip, we see that quite a bit, that is some sort of a setup. So here we have a big dip, comes up and then makes a little shallower dip and then breaks out. So let me just draw that on this chart. So we see on Barclays that we draw a trend line, I'll call it, across these two peaks, and then it comes back and it reverses and it gets through. And here we had I guess you could call this little dip. So we had here, then this one, and it started to rally up. Now here we're sitting here right at this point. Does this start to take off? I don't really know, but I think it's more important to at least be aware of the setup of a higher low if this is going to hold. I don't think it does, but rather than use my guesstimate, I'd rather watch the charts, and if we start to see what we've seen a couple of times work, this is not the time to get too bearish and just follow the chart pressure and see which way this chart wants to go. So here's Comerica trying to take out a prior low. This is down at 63. This was probably 68 or 69, but making a higher low. Same thing here where we could start to break some trends in momentum, and I think that's important. Here's Wells Fargo with a big long trend testing a prior low. If this could hold here and start to reverse, there's new management teams there, so that could influence the chart. And Regions Financial, this one, it hasn't really been, it's been performing bad since October of last year. It's below the 40-week moving average, but it's trying to hold these lows, and again, making higher lows and momentum here, I think, is a pretty important place on the chart. Bank of New York Mellon Corp, briefly took out this low and is trying to reverse again. That chart doesn't look as strong to me. Maybe it's just the last week. Here's Jeffries, broke through I'll call it the 2019 lows, but hasn't taken out the 2018 low. And Intesa San Paulo, this is an Italian bank, I believe, and it's breaking through the December lows, and it goes back to the 2016 level. So a pretty important place for it to hold, but it did just fail at the zero level. Again, that's what I'm worried about. I'm worried about some of these banks over in Europe and Japan and China starting to have problems, and if they can't hold up, then that would be it. So again, at the front of this group of banks is a lot of strong stocks, and they're looking okay, and the exchanges look like a great place to be into. They're starting to break out to new highs, but we're seeing this Mitsubishi Financial and Mitsui looking pretty weak. And so as these banks come down, I think there's a bigger risk that these fail. My point would be that if all of a sudden these banks start to hold at prior lows and make higher lows in momentum and break out here, this is a place to get long, not short. And so, as difficult it is for me to piece together how commodities could be this week and the banks actually setting up to rally here, I think I need to follow the charts and not my opinion, and watch the price action move. So again, if these all of a sudden start to pop, I think you want to be aware of the potential for them to move to the upside. And I hear all of the discussion about the Fed and all that kind of stuff. I think the problems are in Europe, and when they roll over, that would put more weight on us. So I continue to watch it again and trade the charts rather than what the news flow is telling us, because anytime you're trading the news flow, you're probably late, and we want to watch and see how the market responds to this. So here's a chart, Zion Bank, and we can literally draw a very long 2-year trend line across here. If all of a sudden right at zero this starts to rally, this is a place to get on board, not off board, and I'd rather be in tune with the move. I think this one's Italian or Spanish, Unibanco Banco. And the chart has rallied for the last 3 weeks here, and it looks like it's trying to bounce off zero. So if something's going to go on, this is the place to expect that to happen. Okay, so that's a pretty big change in perspective for me, but I think it's, again, I don't know that it'll hold. I think the commodities are going to show everything some weakness. So I'd be more cautious there. Looking across at the dashboard today, the Dow rallied down, the Nasdaq went negative, and then popped back up and is now trying to take out the prior highs. So there is somebody buying this here. The one thing that's interesting is the Russell, after a big rally yesterday, is basically unchanged on the day, has rallied up a little bit, but doesn't look like it's got a lot of horsepower to keep going here. So I'm a little bit more concerned that the Russell might be showing us some leadership, and it bounced off support yesterday. So let's just go find that index. So when we broaden this out, I think I could just click here. When we broaden this out and go to the 5-year view, one of the things, this 1450 level coming across here is pretty important on the chart, and I'll just put it on as a horizontal line. This is an important place on the chart, and again, if this is going to fail here, I think that's pretty meaningful. Okay, so all of that to say, things are important, but if I'm right on my deflationary fears, then we're going to need to be into gold. And so let's just refresh this gold rally. I realize they're pulling back today. They don't rally every day. But we're starting to get some nice moves on these charts. And again, who wouldn't expect these to have some sort of a rally, a pullback after the rally they've kicked off on? And it looks like the weaker charts are the ones holding up here. But look at that chart, American Silver. If that's going to break through that 250 level, I think that's a place to own it, not sell it. So I have made up a gold chart list, and again, we can sort them. Today they're sorted on the percent change, but we can also sort them on which ones have the strongest price action using the scooter ranking and using that level to watch. And here's Kirkland Lake, and that's breaking out to new highs. This Alistair Gold is trying to break out to new highs. Semifo just took right off. So a lot of these are starting to make big moves, and I think there's a lot of momentum there. Now, in order to get this set up, the way to do this is to go into edit mode, scroll down to the bottom, and then select all and remove the numbers from. So it's going to get rid of these numbers here. And then pick your sort order, and if it's whatever volume or whatever you're looking for, we do that by going back to the summary mode, picking the columns we want to sort on, and let's just say sort on volume first and then scooter ranking. So if it has a scooter, it'll sort on that. If it doesn't, it'll sort on volume. And then we use the function arrow key and go down to the bottom and say number in sorted order. And by doing that, it's going to help us find out after this big move for a few days what stocks have started to move. And now when we look at them in 10 per page, it'll put the big ones at the top. And again, I want to use the weekly charts here. So here's a gold miners ETF. And you can see how important it would be if it starts to get through these prior highs and makes new 52-week highs. Definitely made a higher low, and it looks like it's trying to bounce off zero. So this looks extremely bullish to me. Here's Semifo breaking out. That's new 2-year highs. I think that's a breakout you want to own. Here's a new 2-year high in Gold Fields. Alistair is trying to break through this prior high. It had broke out to new 2-year highs a while ago. Kirkland Lake is a ribbon higher, nothing wrong with that. Mag Silver, not too much to go to get to new 2-year highs. Centerra Gold broke out to, I'll call it 18-month highs, really nice. And again, I'm just using the sort order command to help me bring the top performing stocks to the top of the list here. So as these start to break out, this 40-week moving average used to be resistance, broke above it, pulled back, found support, and is starting to take off. That's just bullish behavior and the kind of thing we want to get into. So here's Wesdome, and this stock had been rallying for a while, pulled back, made a nice, this looks like a giant cup and a handle, and starts to take off from here. I think that could be very bullish and make big moves into higher ground, and that chart looks great. Polaris Infrastructure starting to break out of a 9-month base. Savannah Gold, same thing, has made a cup, pulling back here. Usually you want the cup to be after it's been rallying up, and then it makes a cup and a handle, not so much making a cup and handle base. But anyway, this is bouncing off the 40-week and trying to take off higher. That looks excellent to me. And here's Anglo Gold Asante. You could see the same sort of idea. So hopefully that gives you some ideas. Thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific on StockChartsTV. You can also catch replays on the StockCharts YouTube channel.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.